Let's take a look at some information and charts on Dash for Brave New Coin. So Dash is a hybrid proof of work, proof of stake coin with a governance component and a treasury. Probably one of the reasons it's been around or survived since 2014. Had some Roger Ver involvement in its earlier days. I don't know where he's at or what he's up to these days, if he's still involved in the marketing of Dash and whatnot. I thought I'd start with the roadmap because I haven't looked at Dash's roadmap in a while. Nobody talks about Dash, let's be honest. I really don't see anybody mentioning it besides myself. But it launched in 2014. Masternodes are basically a way to encourage a high percentage lockup of supply. It requires 10,000 Dash to have a masternode. They have special governance roles on the chain now. They're allowed to do certain things, including route private transactions, that sort of complex stuff, or adds a complexity layer to the chain. That's changed over the years. Masternodes have sort of evolved into having a bond for the proof of stake node. Tezos does this, where you have to have 10% of your total staked Tezos as a bond. So that is sort of like a masternode with a dynamic component to it. But if we scroll down to current year, they still have a roadmap. They're still doing stuff and things. You can obviously dig deeper into all this stuff. To me, none of this stuff individually is going to move the needle for price, but they're still working on it. They have a treasury, like I said, they have governance, they're voting, things are happening. It's not like the coin just disappeared and nobody's doing anything. It's definitely still very much a thing as far as protocol upgrades and love and care and fostership or whatever of the chain and the marketing and all that sort of stuff. What I thought was unusual, and I couldn't quite figure out why, this probably is a halvening or decline in issuance or something, but since October 2020, Hashrate has fallen off quite significantly, and you don't see that on most other chains, including Zcash. We just look at Zcash real quick. Even Zcash, it declined in April along with a lot of the stuff from China, but it isn't this massive rapid decline. Not even Doge, none of the script coins are like that. So my guess is mining and profitability is playing a role there in the Dash hash rate. Not too sure because profitability is still pretty high at 4 cents per kilowatt hour. This is the most recent ASIC released last month. There was nothing in 2020. So it's possible that these aren't widely available or widely shipped yet and everything else is kind of dead or dying. I'm not really sure. Lots of kind of variables there, but at 4 cents per kilowatt hour, it's still highly profitable, even though it's a hybrid proof of work, proof of stake chain. If we look at the masternodes, this is again 10,000 Dash requirement. This is a good way of just judging at a baseline. Is Dash bullish? Is Dash bearish? Because ultimately a lot of this stuff comes down to supply and demand. If supply is being soaked up into something like masternodes, then it's not being sold on chain or on exchanges. It's not being moved on chain. It's just sort of being held, right? Forced hodl is a masternode. I don't think there's a lockup component or anything like that, but it does tell you the mentality of people just generally who are involved in the ecosystem. From July to July, masternodes had declined by around 500. Since then, though, they picked up a little bit, but not enough to move the needle. Since 2018, this really hasn't gone anywhere. You're not seeing a big jump in masternodes. You know, why would you be involved in masternodes at 2%, 3% adjusted reward after inflation when you can just stake almost anything else these days, you know, and get a better reward? 45% of the chain is participating, which is quite low, maybe the lowest of anything that I look at. Usually it's definitely about 50%, closer to 70, up to 80%. You know, if we look at Solana, for example, some of the newer stuff, now this is a bit different if it's got liquid proof of stake. Solana's at 78%. The adjusted reward is much worse. Even running a validator versus a masternode on Solana is worse than Dash, but the price is much more bullish. It's new, it's fresh, it's got marketing, right? It's got all these hip, cool things behind it, where again, Dash is just kind of this old coin nobody, in my circles anyway, really talks about. Tezos is another one to compare. This is all on stakingrewards.com. Again, 75% participating. The rewards aren't great, but maybe the price chart is more bullish. In any case, all of these proof of stake things usually underperform just baseline lending and borrowing markets for USDC or Tether. You can get I don't know what it is today, but it was between 8 and 10% over the weekend. Now that's highly, highly variable based on supply and demand, whereas this may be more stable, but it's still a better return for the most part. You're not exposing yourself to volatility risk, assuming this isn't a bull market, which it is a bull market. So maybe you're better off, right? You have to game theory all this stuff out. But in general, what are most people with tons and tons of capital doing who could really care less? They're probably going to give it to somebody who's going to give it to somebody to make USDC and then put that in comp or something, right? Like they don't care. They don't want to be involved in any of this stuff for the most part. That's my general read on staking. If we look at transaction counts for Dash in the line here and average transaction values in the fill, the transaction counts have dropped off along with hash rate. So there's probably a correlation there between what you're seeing in on-chain transaction-wise and hash rate. And average transaction values have increased. So you're seeing far fewer microtransactions, basically. And this could be influenced by those private transactions or mixing transactions. I was unable to pull up the website today because it just wasn't loading for me. Dashradar.com. You can check it and look, but it's unlikely that you're seeing a massive influx of mixing or private transactions if I'm seeing transaction counts drop off like this. And again, those are facilitated by masternodes. So no reason to be bullish really on price when you see stuff like that. Active addresses also falling here. You can see they were spiking kind of on a monthly basis from like 2019 to 2021. And then whatever happened recently, again, I don't know what this is, but that is a massive chunk going from 112,000 active addresses to less than 50,000 kind of overnight. So something shut off somewhere. I don't know what, right? Whoever was operating since 2019 shut off their on-chain activity by the looks of it. Or whatever this is measuring isn't measuring what it used to be measuring. I don't know. Just very weird. NVT, on the other hand, has gotten increasingly bullish. So that says you're seeing an increase in on-chain activity relative to market cap since active addresses have slowed down. So if anything, this looks like, if we look at the lack of microtransactions, the increase in utility on chain, it almost looks like some spam nonsense got turned off. And we're finally seeing where this actually sits without all that erroneous or extra activity. Basically where it's been since 2019, right? It hasn't really gone anywhere. So not exactly bullish, but probably not as bearish as it may seem, assuming I'm correct about that spam stuff. If you look at MVRV relative to price, for most coins, it tops out around a 2x multiple, which is the fill here on the left axis. In Dash's case, it rode this 2x multiple for kind of a year before finally topping out at around a 4x multiple. Most recently, it hit that 2x multiple, and that was the exact top. So going forward, I would watch for that 2x multiple. And what this is measuring market cap versus realized market cap, which is another way of looking at on-chain activity. But currently it's at 1. Price increases rapidly without on-chain activity picking up. This is going to increase rapidly and approach 2 quicker, 2x multiple quicker. So it's definitely something to watch if things get bullish again for Dash. Google Trends past 5 years, you can see the previous all-time highs here in Google Trends as well as price because they usually line up. Recently, this has picked up a little bit, but in general hasn't really surpassed that 25 or 25% relative interest over the past 5 years. Flipping gears to technicals, this is the 1-year MA in the green and the 5x multiplier in the red, midline in the white. And on backtesting from kind of all of 2017, it rode this sell zone area or overbought area. I don't know if that's ever going to happen again for any altcoin just because there's so many more altcoins. Back then, there were as many as there were back then, that there were probably fewer than there are now between NFTs and AMMs and anything on BSC and anything on Solana. But in any case, the multiplier is telling you it likes around 1,000 as a target, assuming this thing actually gets bullish. I wouldn't really expect anything beyond 610. 610 is the be careful area because it hasn't hit the bid line since 2018, aside from earlier this year. That's a 3x from here-ish. So I do like 610-ish. Past that is just like bonus. I don't think this thing breaks 1,000 this cycle, but I do like that 610 zone. Looking at the 5200 EMAs, yearly pivots, volume RSI, VPVR. This is on Polo, so the volume is going to look strange because nobody uses Polo anymore, but Polo has the most altcoin trading history. So if you're looking up an altcoin like Dash that's been around since 2014, it's best to look at Polo. But in any event, this price has just gone nowhere since March. It's super volatile, but trend-wise, it hasn't really done much. You could argue bullish 5200 cross. You could say it's above the VPVR. You could say this should get bullish soon. I don't think you're wrong. As far as resistances on the way up, all of these yearly pivots are going to be resistances, and then volume resistance slightly at 300. Nothing to really say about volume or RSI. They're kind of unremarkable, not much going on there, as price just sort of figures out what it wants to do at this level. The cloud, though, says, yeah, this looks really good, and it's the best it's looked since May. This is a bullish Kumo breakout through and through. You could argue ascending triangle. You could probably argue Adam and Eve. You could probably argue inverted head and shoulders. You can argue a lot of stuff with these like illiquid altcoins that don't see a lot of love based on volume. But the cloud is telling you it's above the cloud. You're waiting on bullish cloud here, bullish TK cross. But in general, things are looking better than they have been in many months on the USD pair for Dash. On the 3-day Dash chart against BTC, this thing hasn't been above the 200 period moving average since 2018. Okay, so you can't be bullish on that. Still below that. It's below the cloud. It's been below the cloud since 2018, 2017, but it's below VPVR. It's below yearly pivots. It's basically free fall all-time low territory, or multi-year low, I should say. This isn't a buy for me. Maybe it is a buy for you. I don't know, but there's not even a bull div here yet. You're seeing lower lows in price, lower lows in RSI. And there was a head and shoulders at the bottom, just in case you're unaware that this is a possibility or don't think it's ever reasonable to expect that at the bottom of a downtrend, you can very much get bearish continuation at the bottom of a downtrend with this pattern. I think it's undeniable that this is a head and shoulders, at least in my book. But anyway, none of this looks bullish whatsoever. So that's very much a leave alone in my book. This may have some sort of late cycle mean reversion where you see this quick, swift 3-day, 1 week push back to the 200-day moving average. But I think ultimately this thing just continues to slowly grind lower over time, just like it has on the ETH pair. Just this is the opposite of bullish. It is below the cloud, below the 200, below volume. There's no pivots down here. There's nothing. What you could argue, though, is bullish divergence just continuous since January. So again, it wouldn't surprise me if this thing just pops up to the 200-day moving average randomly during the end of the cycle. That doesn't exactly mean it's a buy here. It just means if you want to be wrong for a while and maybe be right by December, this looks okay. Because I think it's undeniable that there's volume and RSI divs here. Fundamentally, there's no reason to ever hold Dash over ETH. I don't care what you want to think, but there's just ETH is too big. There's too many people using it. You can say it's all scam activity, which I don't think you're wrong, but it has more of a use case fundamentally than Dash currently. So as the big caps explode in price and Dash on the USD pair goes sideways, of course, it's going to suffer against big caps. And if we get a late cycle rotation, Dash USD and Dash BTC and ETH should see some sort of mean reversion temporarily. Lastly, let me just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital and Enzyme.finance, a non-custodial portfolio management tool, or you can send ETH or USDC, or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults I'm in here on Yearn, Comp, and Aave, as well as the trades in the trades tab down below, and deposits, withdrawals, as well. This is a completely opened fund or portfolio, and you can see who's coming in and out at any time. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.